This is question number 5 on homework 3. This is just one version of the question. You may have encountered a different version, but this version seems to be probably most complicated version among all the versions of this question. So we're given the balance sheet and the income statement of a Best Buy. And it's basically asking us to calculate the NOPAT, NOA, and related numbers. So again, we need to pay close attention to the rounding requirement, hint, and also the hints. Hint, treat equity in income of affiliates as operating. Yeah. So this relates to the calculation of NOPAT. So as usual, I would like to copy the financial statements to Excel in order to facilitate the calculations. So paste the special text, and I want to double check all the answers and probably get rid of this dashed symbol, because sometimes if you don't get rid of them and you do the calculations, you may give the wrong error message. So that's basically the income statement, and now the balance sheet. So leave some space for the calculation for NOPAT. So next job is simply, if you look at part A, it's computing NOPAT. So that's from the income statement. And hint, treat equity in income of affiliates. So that's basically this item here. So it's treating this as operating. So that means normally we know to calculate NOPAT, we start from the so-called NOPBT, right? Net operating profit before tax. So normally this is just operating income. But in this case, equity in income of affiliates is also treated as operating. So the NOPBT is basically the sum of these two, operating income and the equity in income of affiliates. And so the next item is tax, right? Tax expense. Because NOPAT, if you look at my lecture slides, NOPAT is simply the, let me double check here. NOPAT is the net NOPBT minus tax on operating profit. And further, tax on operating profit equals tax expense plus pre-tax net non-operating expense times statutory tax rate. So tax expense, basically that's income tax expense here, and pre-tax non-operating expense here. Notice it's plus, so here it's treating the expense as a positive number. But in this case, you can see that interest expense is actually in a negative format. So that means if we sum up all the non-operating expense, which includes investment income and other, and this interest expense, and then we should add a negative sign before it, because it's treating expense as a positive number. But on this financial statement, actually the expense is taken as a negative number. So that's why we need to add a minus sign in front of the summation here. So that is the total pre-tax non-operating expense. And with that, we can calculate NOPAT. So this is NOPBT, and then minus tax on operating profit, right? And tax on operating profit further equals tax expense, and then plus the pre-tax non-operating expense, and then times the statutory tax rate, which is 37%. So, and again, round your answer to the nearest whole number. And we should probably further read other hints and rounding requirements to see whether subsequent calculations will use the rounded number or maybe use the more precise number. You can see that part C here says do not round until final answer. So that means that we should probably we don't have to use the round function that I introduced in an earlier video. Right? Round function in Excel basically is just rounding a specific number into a certain number of decimal places, not just the format, but for the number itself. But in this case, we just need to show the format, change the format to round to no decimal place. So this is basically our final NOPAT. So I just need to copy this number back. And part B, compute net operating assets for these 2 years. Hint, treat the equity and other investments and the long-term liabilities as operating. Okay, so this probably is the most challenging part for any this type of calculation, because the income statement is relatively easy to deal with in terms of decomposing the items into the operating and the non-operating items. But the balance sheet sometimes could get a little bit involved in order to do the same. So the first job to do the NOA calculation is to single out which items on the balance sheet are operating related and which items on the balance sheet are non-operating related. So let me mark all the operating related items in red. We start from the asset side, right? Cash and cash equivalents. As we said, this is not operating related, right? And short-term investments, and this is also not operating related because this firm is, I guess, it's Best Buy. So doing the investment, so short-term investment here probably include buying some commercial papers, including investing in the treasury bills, such type of, and also the monetary market, those type of short maturity investment, right? But for a company like Best Buy, this is not its major operations. So this is not a operating item. So, but receivables are operating, and mechanized inventories are also operating, and other current assets also operating generally. And property equipment operating, land and buildings operating, and leasehold improvements. And this is like doing some improvement on the leased asset. So this is also treated as a operating item. Fixtures and equipment also operating, and property under capital lease, this is also treated as a operating. So, and these two numbers actually should be here because this is basically sum up all the fixed assets, and then we less the accumulated depreciation, and then we get this net PPE. And you can see that in this case, all the fixed assets are operating. So that means later on, when we add the total operating assets, we just need to add this final item, 4070 here. So, and then continue, goodwill is operating, and trade names, net. So this is like trademarks, and operating too. Customer relationships, operating. So these are intangible assets, right? And equity and other investments, generally this is not operating, but you can see from the hint here, part B, hint treat the equity and other investments and the long-term liabilities as operating. So we should include this as operating in this case. And other non-current assets also is generally treated as operating. So we're done with the asset side, and now let's move to the liability side. And we start from current liabilities. Accounts payable is operating, and unredeemed gift card liabilities, and this is also operating, right? Because this relates to, this is like deferred revenue, as we were learning in module 5. Accrued compensation and related expense is also operating. Accrued liabilities operating. Accrued income taxes operating too. And short-term debt, this is financing related, so it's not operating. And current portion of long-term debt is also financing related, not operating. And long-term liabilities is, as the hint suggests, it's actually treated as operating. And long-term debt is not operating. This is financing related. So we are done with demarking all the items on the balance sheet into the operating and the non-operating components. When I say all the items, actually we mean the asset and the liabilities items that do not include the equity side. So now let's calculating the operating assets and operating liabilities, and then their difference becomes an OA, right? Net operating asset. So operating assets basically is to sum up all the items on the asset side which are marked in red. So we start from receivables, and then mechanized inventories, and then other current assets. And then, as we said, we can continue to sum up all this red, but we said earlier, for the fixed assets, all the items on the fixed assets are operating. So we can just sum up this final term, the net PE. And then goodwill, and then trade names net, and then customer relationships, and then equity and other investments, and then other non-current assets. So we're done with the asset. We can pull the cell to the right to also get the operating assets for the other year, and operating liabilities do the same, but for the liability side of the balance sheet. We start from the accounts payable, and then add the unredeemed gift card liabilities, and accrued compensation, and accrued liabilities, and accrued income taxes, and finally long-term liabilities. So this is basically the operating liabilities. So then finally the operating net operating asset is the difference between these two, the OA minus OL, and then pull the cell to the other year. We get also the number for the other year. So now let's copy the number back to the cell 2010. This is the number, and 2009, this is the final number. And part C, compute best buys RNOA. We know that RNOA basically is defined to be NOPAT, right? It's NOPAT, it's right here, and then divided by the average level of the NOA. So average, I just use the average function and open parentheses, and then I can choose these two numbers, NOA, and close it. So then we're done with this. But if you check the rounding requirement, you can see that do not round until final answer, round 2 decimal places. But here notice it has the percentage sign. Both RNOA and NOPM has the percentage sign. So we just change this format to be in percentage and keep 2 decimal places. So I can now copy the number 21.09. 21.09. And NOPM, net operating profit margin, this is defined to be NOPAT. NOPAT divided by the revenue, right? Revenue is right here. So similarly, we need to change this format to be in percentage term and keep two decimal places. So this gives us 2.86, 2.86. And NOAT, net operating asset turnover, and this is defined to be revenue, right? Revenue, and then divided by the average level of the NOA. Average level of the NOA. So NOA is right here. And then we have this 2 years number. So I just use the average function again. But in this case, we don't have to use the percentage. We don't have to be in percentage format, but we need to keep these two decimal places. So this gives us 7.38. So part D, compute net non-operating obligations for these 2 years. So net operating expense, net non-operating obligations, this is defined to be the non-operating liabilities minus non-operating assets. So that means this is the difference between all the items on the liability side which are not marked in red minus and all the items on the asset side which are not marked in red. So I start from the liability side, which is the short-term debt, and then plus the current portion of the long-term debt, and then plus the long-term debt. So we are done with the liability side of the non-operating items, and then we subtract the asset side, all the non-operating asset items. So that means we should subtract the cash and equivalents, and then subtract the short-term investments. I guess those two are the only non-operating assets. So we are basically done with the calculation for the NNO, and then we can pull the cell to the right to also get the number for the other year. So we can just copy the number back. So this gives us minus 114, and this is 1454, and that's the NNO for the other year. And part E, compute return on equity ROE for 2010. Round your answers to the 2 decimal places. Do not round until your final answer, okay? So ROE, this is defined to be net income. But if you go to the income statement, you'll see that in this case, net income has actually, we have 2 net incomes. One is net earnings, including non-controlling interest. The other one is excluding the non-controlling interest, which is the net income attributable to Best Buy. And if you check the definition of NOE from the book and from my PowerPoint lecture slides, you should notice that we generally use the net income attributable to Best Buy. That means the ROE we are calculating here is from the perspective of the parent company. So we use this number, and to be consistent, the denominator ROE, for the ROE calculation, the denominator is the shareholders' equity. But this term also has 2 numbers. One is the total equity. You can see the total equity. The other one is the total Best Buy Co. shareholders' equity. Since we have used the income attributable to the parent company for the numerator, and for the denominator, we should also use the shareholders' equity from the parent company's perspective. So that means we should use the average level of the total Best Buy shareholders' equity of these 2 numbers, the average level. So this is my ROE. Again, pay attention to the final input here is in percentage format, and it's also asking us to round 2 decimal places. So we should do that, format cells, and put this in percentage and keep 2 decimal places. So then we can copy the number 24.03, 24.03, and infer the non-operating return component of ROE for 2010. Use answers from above to calculate. Round the answer to 2 decimal places. So we know that the non-operating return, so far the job we are doing here is to decompose the balance sheet and income statement into the operating and non-operating items. And based on that, we have done the calculation for the return on net operating assets. So this is basically the operating return, and then the difference between ROE and this RNOA will give us the non-operating return. So this is the ROE minus the RNOA. So this gives us 2.94. 2.94. All right, final part, G. Which of the following statements reflects the best inference we can draw from the difference between Best Buy's ROE and RNOA? Notice here that ROE is greater than RNOA. So that means the non-operating return is a positive number, right? It's 2.94. So if it's positive, that means the non-operating here basically is coming from, because if you notice that when we do the calculation for the operating return, which is RNOA, we have excluded all the financing items from the calculation, like the long-term debt, the short-term debt, those kind of financing items. So the non-operating return actually is the return generated from those financing items. When you borrow, you have to pay interest, right? So that's sort of like the cost of debt. So the positive non-operating return simply suggests that the return generated from borrowing will be greater than the cost of debt. So we just look for the answer which kind of matches that kind of analysis. So ROE greater than RNOA implies that Best Buy's equity has grown faster than its NOA, and that's not what we have. Cannot infer this. And ROE greater than that implies that Best Buy has taken on too much financial leverage. We also cannot infer this. And C implies that Best Buy is able to borrow money to fund operating assets that yield a return greater than its cost of debt. Excess accrues to the benefit of Best Buy's shareholders. And that's true, because why the excess accrues to the shareholders? And because ROE is a measure of return from the perspective of shareholders, right? So this, and basically this ROA is the return generated from the operating side of the firm. So this non-operating return is the return generated from the non-operating side of the firm. So, but this will also accrue to the benefit of ROE, because ROE is the sum of this. So this statement is true. And let's check our answer here. Looks like we have got 11 points out of 11. So that means we have got everything correct.